Picture this. The world is rushing headlong into electric cars, automakers are pouring billions into battery technology, and governments compete to outgreen each other. And yet, in the midst of all this, Volvo, the poster child for Scandinavian safety and eco-conscious design, has just thrown a curveball. Instead of doubling down on full electrification, they're rolling out a brand new plug-in hybrid SUV, the XC70, targeting the world's most competitive and fast-evolving car market, China. Why would Volvo risk it all on a hybrid, right when everyone says the future is 100% electric? What do they know about the market and the future of technology that others might be missing? Let's journey into Volvo's bold strategy, the hidden opportunities in China's car market, and what the XC70 really means for the global battle between gasoline, hybrid, and electric cars. Are we witnessing a masterstroke or a costly detour? And could this hybrid become Volvo's secret weapon for global dominance? First, let's set the scene. Volvo, once synonymous with boxy wagons and solid Swedish engineering, has transformed itself over the past decade. Under Chinese ownership since 2010, it's been on a mission to reinvent itself as a premium brand, marrying Scandinavian minimalism with cutting-edge technology. The company has set ambitious sustainability targets, pledging that by the second half of the decade, half of its global sales will be pure electric, with the rest featuring some form of electrification. In public, the messaging is clear. Volvo is all in on an electric future. Yet the story behind the scenes is more nuanced and a lot more interesting. While Europe pushes hard for all-electric cars and the US increasingly follows suit, China, now the world's largest car market, has been writing its own rules. Chinese consumers, government incentives, and local competitors have created a unique environment where plug-in hybrids are not just surviving, but thriving. Many drivers want the smug environmental credentials and instant torque of EVs, but worry about range, public charging infrastructure, and the sheer scale of transition. The answer for millions is the plug-in hybrid, a car that does the school run on electric power, but can go cross-country on gasoline with zero stress. Cue the Volvo XC70. Don't let the familiar name fool you. This isn't the rugged, lifted wagon of old. Instead, it's a mid-size SUV, designed to slip between the XC60 and the flagship XC90, but built from the wheels up as a hybrid, not a compromise. Volvo's president and CEO, Håkan Samuelsson, didn't mince words. The XC70 marks our strategic entry into the extended-range plug-in hybrid segment, a perfect bridge to full electrification. It enables us to maintain and develop a balanced product portfolio while offering a highly attractive alternative to customers who are not yet ready for fully electric cars. This is also an example of regionalization, where we adapt to local market needs. So what exactly is the XC70 PHEV and why is it making waves? Let's start with the hardware. The XC70 is built on Volvo's all-new Scalable Modular Architecture (SMA) platform, a forward-looking design toolkit created for both plug-in hybrids and future models. This adaptability lets Volvo rapidly adjust to market trends while keeping manufacturing costs under control. The car itself splits the difference size-wise. At 48-15 mm long and 18-90 mm wide, it's bigger than the XC60 but falls short of the full-size XC90. The interior, predictably, is classic Volvo, minimalist, airy, and tech-savvy, with a clear focus on comfort for the daily realities of Chinese urban life. Under the hood, the XC70 PHEV boasts a turbocharged 1.5-liter three-cylinder gasoline engine, producing a respectable 161 horsepower. But the real magic comes from its battery options. Buyers can choose either a 21.2 kilowatt-hour lithium iron phosphate battery, supplied by China's battery giant CATL, or a larger 39.6 kilowatt-hour nickel manganese cobalt pack. That translates into an impressive electric-only range, up to 124 miles, using China's CLTC standard for the big battery, far more than most plug-in hybrids on the market today. For context, BMW's X5 xDrive 50e offers about 68 miles under the same test cycle. The message is clear. Volvo isn't just checking the hybrid box. They want to leapfrog the competition on electric range, making the XC70 a genuinely usable EV for most of the week. And it's not just about range. The hybrid system is tuned for efficiency. The entry model sips just 5.85 liters per 100 kilometers once the battery is depleted, while the bigger battery version drinks slightly more at 655 liters. The transmission, a sophisticated three-speed design, is engineered to balance smooth city driving with effortless highway cruising. Volvo is betting that for the Chinese urbanite, dealing with everything from gridlocked commutes to weekend getaways, this blend of electric range and gasoline backup is the sweet spot. But why bet so heavily on a plug-in hybrid, and why now? The answer? China is the world's car laboratory, and hybrids could be the missing link. In 2022 alone, Chinese consumers bought over 1.5 million plug-in hybrid vehicles, a figure that's been climbing at breakneck speed, even as EV growth shows signs of plateauing. The Chinese government's policy machine sends mixed signals. On the one hand, there's heavy investment in charging infrastructure and aggressive targets for new energy vehicles. On the other, consumer subsidy schemes for plug-in hybrids will remain in place through at least 2025, with only a gradual tapering thereafter. That gives hybrids a longer runway to thrive in China than in many Western markets. Industry insiders have been taking notes. Cui Dongshu of the China Passenger Car Association points out that consumer demand for both electric and gasoline capabilities is driving manufacturers to get creative with PHEVs, and that aggressive pricing, especially from domestic rivals, is pressuring everyone to innovate or be left behind. Volvo, no stranger to adaptation, sees a unique window. Plug-in hybrids could hit 30–40% of their China sales by 2028 if the trend continues. That's a huge potential profit pool that the brand is determined not to miss. Of course, nothing in China's automotive sector is ever simple. The market is fiercely competitive, with local giants like BYD cranking out stylish, high-tech, and affordable PHEVs at a blistering pace. International brands risk being squeezed out unless they can offer something distinct, whether it's superior technology, brand prestige, or unmatched range. Volvo is trying to thread the needle, leaning on its upscale reputation while leveraging Chinese battery tech and local manufacturing. There's also the issue of economics. Volvo's chief commercial officer, Bjorn Anwal, was candid. "We'll make better margins on the X30 than we do on the XC40 BEV and the C40, driven by efficient design and shared components." The XC70, sharing major elements with other Volvo models via the SMA platform, is designed to keep costs down while maintaining premium pricing. Profit margins in China are razor thin, and automakers are scrambling to squeeze every yuan of value from their supply chains and design choices. Throw in the policy uncertainties. Will China's government double down on plug-in hybrids, or switch decisively to full EVs in the next 5 years? And the stakes couldn't be higher. Another twist: the global context is shifting too. Just as Western automakers face a slight dip in EV demand and increasing skepticism about public charging infrastructure, hybrids are regaining attention as the pragmatic bridge technology. Some US and European car buyers, echoing their Chinese counterparts, aren't quite ready to go all electric. Volvo's move may look, on the surface, like a bet on China, but it's also a test case for hybrid resurgence worldwide. Yet success is far from guaranteed. The hybrid market in China is brutally Darwinian. Domestic brands, unshackled by legacy technology or brand expectations, can move with astonishing speed. BYD, for instance, already offers plug-in hybrids with both massive electric ranges and aggressive pricing. Global giants like Toyota and Honda have struggled to make significant headway with their hybrids, often getting undercut on both price and features. Volvo's trump card could be its image, the blend of Scandinavian luxury, safety technology, and now an unusually long electric-only range. But will that be enough to sway Chinese buyers spoiled for choice? Meanwhile, the technology itself is evolving at record speed. Battery prices have dropped 60% over the last decade, but supply chains remain volatile. If new breakthroughs in solid-state batteries happen faster than expected, pure electric cars could leap ahead even further, shrinking the window for PHEVs like the XC70 to shine. On the other hand, if range anxiety and infrastructure bottlenecks persist, hybrids could dominate the next 5 years and beyond. As the XC70 prepares for its Chinese debut, it stands as both an opportunity and a test. Can Volvo outmaneuver local and global competitors in the most important car market on Earth? Can their hybrid approach bridge the gap between today's consumer anxieties and tomorrow's electric utopia? And perhaps the biggest question of all, is this the beginning of a new hybrid era, or Volvo's last stand before the world goes fully electric? In the next part, we'll explore how the XC70's launch could reshape global strategies, the looming threats from both policy and technology, and what it really means for the future of mobility. But what does the future hold for Volvo's bold new plug-in hybrid strategy in China, and possibly beyond? To answer that, we need to peer into the rapidly evolving landscape of both technology and policy, because every move Volvo makes here could set off ripples far outside China's borders. Let's start with the Chinese market itself. On paper, it seems like a logical play. Chinese consumers are showing strong demand for flexible, extended-range vehicles. PHEVs, with their combination of gasoline reliability and silent electric cruising, hit a sweet spot for buyers still uncertain about China's ever-changing charging infrastructure. As Kui Dongshu from the China Passenger Car Association puts it, consumer demand for both electric and gasoline capabilities makes PHEVs an attractive option. But nothing in China's car market stays still for long. The government's generous NEV purchase tax incentives, currently set to expire, or at least shrink, after December 2025, could dramatically alter the equation for buyers. The NEV category, which includes both plug-in hybrids and pure EVs, currently enjoys a full tax exemption. From 2026, though, that benefit will be slashed by half. For the XC70 and its peers, this could mean a significant bump in price for potential buyers, pressuring automakers to either absorb the cost or risk losing market share. Volvo is betting that, by then, its regionalized strategy and razor-sharp cost management will keep the XC70 competitive, even as price wars intensify. According to inside reports, Volvo is aiming for an ambitious 15 to 20% gross profit margin on its newer models, like the EX30, and a solid 8 to 10% operating margin by the middle of the decade. Achieving those numbers means squeezing every drop of efficiency out of its scalable modular architecture platform and keeping the supply chain lean. Yet these ambitions collide head-on with the reality of China's cutthroat hybrid market. Domestic giants like BYD, Li Auto, and Geely aren't just fighting for the same customer. They're launching aggressive new PHEV models almost quarterly, each boasting longer ranges or lower prices. For Volvo to stay ahead, they'll need not just great engineering, but also agility in adapting the XC70's specifications, pricing, and marketing as market conditions shift. Imagine for a moment the possible future scenarios. If current trends hold, plug-in hybrids could account for 30 to 40% of Volvo's China sales by 2028. That would be a massive shift for the brand, and a resounding validation of their hybrid bridge strategy. Volvo could become a leader in this extended-range niche, leveraging its reputation for safety and Scandinavian design. In this scenario, the XC70 wouldn't just be a local hit. It could pave the way for global expansion, especially as Western markets grow wary of sudden shifts to full electrification and start to value flexibility again. But there's another path. If battery technology sees a major leap forward and China's charging infrastructure matures faster than expected, the pendulum could swing hard towards pure electrics. In this alternate future, PHEVs like the XC70 would face a shrinking window of relevance. They'd become transitional tools, still valuable in the short term, but quickly overshadowed by ever more affordable, longer-range EVs backed by increasingly eco-focused policy. This is where the consequence of Volvo's gamble becomes crystal clear. The XC70 is more than just another model. It's a real-world experiment in adaptation, a high-stakes test of whether a global legacy brand can blend its DNA with the lightning-fast demands of China's car market. Succeed, and the XC70 could rewrite the hybrid playbook not just for Volvo, but for every international automaker watching nervously from the sidelines. Technology is another wild card. The XC70 already benefits from two battery options, a 21.2 kilowatt LFP battery for cost-conscious buyers, and a larger 39.6 kilowatt NMC pack that pushes electric-only range to a segment-leading 180 km. As new battery chemistries emerge, with faster charging, improved durability, and lower costs, the next generation of PHEVs could obliterate many of today's range and price anxieties. But if rivals leap ahead with better batteries or smarter integration, even the XC70's impressive credentials could be quickly eclipsed. Supply chains are also fragile, another potential pitfall. The pandemic taught automakers some harsh lessons about sourcing components. If disruptions return or geopolitical tensions rise, Volvo's carefully calculated margins could evaporate overnight. Their ability to localize production and cultivate strong relationships with Chinese battery suppliers like CATL may prove not just prudent, but essential for survival. Let's not forget the human dimension, consumer taste. Chinese buyers have demonstrated remarkable agility in embracing new technology, but fashions change fast. Today's must-have plug-in hybrid can become yesterday's afterthought with one viral social media campaign or a new government decree. Volvo must stay relentlessly tuned to these shifts, evolving the XC70's digital features, in-car tech, and even after-sales services to maintain its appeal. So, standing at this crossroads, what are the practical lessons for you, the savvy viewer, car enthusiast, or even industry insider watching this market drama unfold? First, the XC70's story is a case study in the power of flexibility. Whether you're shopping for your next family car or just fascinated by tech trends, the Chinese auto market demonstrates that solutions aren't one-size-fits-all. Plug-in hybrids offer real advantages for drivers who crave electric commuting without giving up the security of gasoline range. For many, especially in regions where charging networks still lag behind, PHEVs like the XC70 bring the best of both worlds and show that electrification doesn't have to be all or nothing. Second, keep an eye on government incentives. Policy can make or break new tech adoption. If you're in the market in China, or watching as other governments debate EV subsidies, remember that tax breaks, registration benefits, and even parking perks can tilt the financial math in favor of hybrids or electrics, sometimes overnight. Smart consumers and smart companies always watch for the fine print before making a big move. Third, expect that the price and technology race will only get hotter. Brands like Volvo are proving that international automakers can play, and sometimes win, on China's tough home field, but only if they're willing to localize, listen to consumers, and cut costs to the bone. For buyers, that means more features, better performance, and lower prices are coming faster than ever. Another practical insight: don't underestimate the speed at which the market and technology can change. Today's PHEV sweet spot could be swept away in a few years by a breakthrough in solid-state batteries, new charging standards, or a dramatic swing in energy policy. If you're considering a hybrid now, enjoy the flexibility, but keep your eyes open for new developments, especially if you're planning to keep your car for the long haul. And here's a tip for industry watchers. Pay close attention to platform strategies like Volvo's SMA, which supports not just plug-in hybrids like the XC70, but also future electrics. This kind of modular approach is key to surviving in a market as unpredictable as China's. It allows automakers to quickly pivot as consumer demand, technology, or policy changes. For Volvo, the SMA platform is both a safety net and a launch pad. So, circling back to our big question, is the XC70 PHEV a bridge to the future or a risky detour? The answer is, it's both, and that's the genius and the gamble of Volvo's Chinese adventure. For buyers who aren't ready to go fully electric, the XC70 delivers exactly what's needed: generous electric range for daily drives, the reassurance of a gasoline backup for longer journeys, and the unmistakable allure of Volvo design and safety. It's a pragmatic, consumer-focused response to a market in flux. And, if sales targets are met, it could buy Volvo valuable time to perfect its fully electric strategy. But make no mistake, the clock is ticking. The window for PHEVs as a transitional technology may be shorter than anyone expects. Policy, battery breakthroughs, and an ever more sophisticated consumer base are all pushing the industry closer to a pure electric tipping point. If Volvo can use this bridge to build brand loyalty, gather real-world data, and master local production, the XC70 could indeed connect today's practicalities with tomorrow's possibilities. If not, if the market shifts too quickly, the gamble could become a costly detour, an expensive lesson in the dangers of hedging bets in a volatile market. And here's a secret fact you might not have heard. While the XC70 is currently branded as a China-first experiment, inside sources say Volvo is quietly preparing for potential launches in Europe and even North America if demand for PHEVs rebounds in the wake of slowing EV sales. The template being set in China could, in a few short years, shape how Volvo responds to changing consumer sentiment all over the world. At the end of the day, Volvo's XC70 isn't just a new SUV. It's a rolling laboratory, a test of how tradition, technology, and global ambition can mix to chart a path through the most dynamic auto market on Earth. What do you think? Is Volvo making a smart bridge to the future, or is this a detour they'll regret? Let us know your thoughts in the comments below. And if you enjoyed our deep dive into the strategy behind the XC70's China debut, don't forget to hit like and subscribe for more insider looks at the global auto industry. Next week, we'll reveal how another iconic